The hedge funds don't seem to be feeling as much love. What are we seeing from the multistrats in terms of performance after we seemingly saw a little bit of a rebound coming into May? Are they still feeling it?
Okay, so what's beautiful about the multistrats is they're not as tethered. They are not tethered, I should say, to the market in terms of whether the market is up or bound or rebounding. That's for another category, which we'll get to. They are exceptional at managing volatility and putting up consistent performance. And what I would shine a light on right now, Shonali, is we have lived through one of the most volatile periods in recent memory, as we know, over the last several months. And the fact that the multi-managers have navigated this as effectively as they have, they've stayed in largely positive territory during the duration of this period, I think shines a light on the fact that the best ones, I'll say it like this, have moneyballed the industry.
Fascinating. So if you look at their ability to draw in talent, how does it compare to the rest? Because you are seeing, I mean, there's no other way to put it, crazy pay packages. You've been seeing teams lifted out for $100 million. You're looking at Ken Griffin trying to put a 4-year non-compete on in Florida. I mean, what does that talent war look like for the multistrats?
Okay, so, and that is, the multistrats are the biggest acquisitors of talent, right, by virtue of their name. Multi-managers is really the, euphemism that I'm referring to. They need multiple managers to manage capital. First off, let me provide some perspective on these pay packages. It's not like someone is getting an $100 million check and walking across the street and able to cash that. Okay, part of it is a hefty guarantee, for sure, to pay that person for the period they're sitting out. Part of it is deferred. Part of it is a wallet so that they can hire a crackerjack team. And a lot of it also is on the come, where they're getting, if you normally get a 20% payout, Shonali, I'm going to give you a 30% payout up to $200 million. That's an extra $20 million, but you got to make that $200 million. The bottom line of all of this is you don't want to be beholden to what I'll call the auction. So if you're a multi-manager and you lose someone, which you inevitably will, because this is a merry-go-round, someone leaves Peter to go to Paul, or you know what? There's a lot of capacity for this strategy right now. Let me take a crack at starting my own fund. How are you going to replace that person? Do you always want to be in a bidding war? No, because then you're beholden to paying, I would actually say maybe overpaying for air quotes talent. These people are not necessarily as talented, or remains to be seen, as the headline numbers would suggest. That's a lot of money for the multi-managers to have to recoup on their investment, TBD on whether they will. Much smarter to grow talent in-house. And the best ones, like Point72 and Citadel, are a factory for what I like to call alpha makers.
That's what I was actually going to ask about. So I don't obviously know as much about this industry as Shonali, but it would seem to me that a lot of these people learn on the job. So can you foster a sense of loyalty? Does Steve Cohen do that? Does Ken Griffin do that? When you build them up from the bottom up, it doesn't help, obviously, IDW if they, make these.
Well, it does help IDW, because the reality is, if there is a culture, and that's very hard, it's not, they're not all created equal in terms of their ability to train and develop and mentor and make you, Matt, the best version of yourself that you can be at each point along the experience curve, and also give you a pathway. It's not just about coming in as an analyst and being a good analyst, or coming in as a PM and being a good PM. At Citadel, you can go very successfully, as at Point72, from analyst to PM to running a business. How exciting is that? You could be a business head at Citadel. Steve just created a new fund around one of his PMs, Turion, right? So that's a pathway where now you have, in that example, Point72 with you to raise capital. They raised $1.5 billion out of the gate, and the PM has all of the incredible resources available to him at Point72. That's not all multi-managers created equal, and that's what creates stickiness and durability.
And then the ability to build out a team under that, perhaps. One question I have is where we're not seeing as much success. It looks like the long-short business this year, for all of the volatility in the market, has not played out quite as well, and that comes after some really tough years in recent years.
Yes, so well said.
What's going on?
Okay, so, you'll see the returns in May. breaking news, really not. They're going to be better than they were in April. So is the market. The problem with this is, one, the swings of volatility. Okay, I'm not going to name names, but there are so many examples of funds that were down in like the mid-teens in April, and now we're up mid-single digits. Think about that as an LP, and think of how nervous that might make you about what's going to happen next month. And as an LP, what I'm thinking about is, how much alpha am I getting net of fees relative to the underlying beta exposure? That's like very complicated. I don't want to think about that. I want alpha, and I have the multi-managers in order to access that, or I want beta, and I can pay nothing for that, right? Buying an ETF or the S&P, where the long-short funds will raise money is not in their hedge fund product. You heard it here first, Shonali. They are not raising capital. I don't care what they tell you in their hedge fund product. Where they are raising capital is long only, because there is appetite for the alpha component of a beta product.
Can I just ask quickly, I have a curveball question for you.
All right, let's hear it.
Traditionally, Harvard has been a feeder university for these masters of the universe, right? Do you see that continuing after this kerfuffle?
Well, my son goes to Harvard, so I don't know how I'm supposed to answer that question. Yes,
you went to Harvard, right? But
I
who else can provide the best financial minds in the world?
Well, I mean, there's a lot of good schools out there. I wouldn't say Harvard has a lock on that. What I will tell you is it pertains to talent, and I've seen this up close. Literally, I visited my son a few weeks before the end of the year, and I was hanging out with him and his friends who are finishing their sophomore year, Matt. And the aggressiveness by the top hedge funds, namely the multi-managers, in locking up these kids now for their junior summer. And the pay packages, so the talent war has gone way downstream, as we've seen, and you guys alluded to it as well earlier, are huge, even for kids, so that they have first dibs.